Welcome to SelfTax YouTube channel. If you're an expat, business owner, or landlord and you're not subscribed yet, this channel is for you. We break down tax rules, deadlines, and changes clearly and simply. Hit subscribe and stay compliant, without the stress. If you are preparing for making tax digital for income tax, one of the biggest worries is penalties. What happens if you miss a quarterly update? Will HMRC fine you straight away? Will one mistake trigger a penalty? And is 2026 treated differently from later years? In this video, I am going to explain exactly how the MTD penalty position works in 2026, what happens if you miss a quarterly update, and why this area is more nuanced than most people think. The first thing most people get wrong is assuming that one missed quarterly update in 2026 automatically means a financial penalty. That is not what HMRC says. If you are required to use MTD for income tax from the 6th of April, 2026, HMRC says it will not apply penalty points for late quarterly updates during the first tax year, which is 2026 to 2027. That is the first key point to understand. HMRC says that if you are required to use MTD for income tax from the 6th of April, 2026, it will not apply penalty points for late quarterly updates for the first tax year, 2026 to 2027. No. That would be the second big mistake. Just because HMRC will not apply penalty points for late quarterly updates in the first year does not mean the updates are optional. HMRC still expects you to send them. And HMRC's guidance says you still need to submit your quarterly updates before you can submit your final tax return. HMRC says quarterly updates still need to be sent, and they must be submitted before you can complete your final tax return process. This is where people need to pay attention. Even though HMRC will not apply penalty points for late quarterly updates in the first tax year, penalties can still apply in other areas. HMRC says penalties will still apply for late tax returns. And if you pay your tax bill after the due date, late payment penalties can also apply. So the correct interpretation is not that 2026 is penalty-free. It is that one part of the regime has a softer start. HMRC says that although there will be no penalty points for late quarterly updates in the first year, penalties will still apply for late tax returns and for late payment of tax. Outside that first-year relief on quarterly updates, the new MTD late submission system is points-based. HMRC says a penalty point is normally applied each time a quarterly update or tax return deadline is missed. Once 4 points are built up, a £200 financial penalty is triggered. That system is designed so a one-off error does not immediately create a cash penalty, but repeated missed deadlines do. HMRC's published MTD guidance says the new late submission regime is points-based, with 1 point for each missed obligation and a £200 financial penalty once 4 points are reached. Late payment is separate from late submission, and that matters. For MTD for income tax, the penalty system for late payment follows a staged structure. HMRC's current policy says there is no late payment penalty if the tax is paid within 15 days. If the amount is still unpaid after day 15, the first penalty can apply. If it is still unpaid after day 30, that increases further. And from day 31 onwards, an annualized penalty rate can continue running on the outstanding amount. Government guidance on the late payment penalty reform for MTD says the rate has been increased to 3% at day 15, 3% at day 30, and 10% per year from day 31 on the unpaid amount. HMRC's MTD penalties guidance confirms that new late payment penalties apply from the year a person joins MTD. So let us answer the exact question directly. If you miss a quarterly update in the 2026 to 2027 tax year and you are one of the taxpayers entering MTD from the 6th of April, 2026, HMRC says it will not give you penalty points for that missed quarterly update. but you will still need to send the update. And you still need to keep your records properly. So missing a deadline is still a compliance problem, even if it does not create penalty points immediately. HMRC says taxpayers mandated into MTD from the 6th of April, 2026 will not receive penalty points for late quarterly updates during the first year, but the quarterly updates still need to be submitted. After that first tax year, the position becomes stricter. HMRC says penalty points for late quarterly updates will apply in later years. So if someone becomes relaxed in 2026 because they avoided points in the first year, that could lead to problems later when the full system is operating as normal. HMRC says the first year protection applies to the 2026 to 2027 tax year for those mandated from April 2026, but late submission points will apply for quarterly updates in later years. The smartest approach is not to rely on the first year relief. Instead, treat quarterly deadlines seriously from day one. Keep digital records updated regularly. Use software properly. Set internal deadlines earlier than HMRC's deadline. And do not assume no penalty means no consequence. That mindset is exactly what keeps people compliant when the regime tightens. HMRC's MTD guidance is built around digital records, compatible software, and regular quarterly reporting, so ongoing organization is the practical defense against submission failures. The real risk is not just one missed quarterly update. The real risk is a pattern. Messy records, late updates, confusion about software, delayed year-end filing, and then late payment on top of that. That combination is where people move from simple confusion into real penalty exposure. HMRC's new MTD regime separates late submission and late payment rules, meaning poor record keeping can create multiple compliance failures rather than one isolated problem. So what happens if you miss a quarterly update in 2026? If you are one of the taxpayers entering MTD for income tax from April 2026, HMRC says you will not get penalty points for late quarterly updates in that first tax year. But that does not mean the deadlines do not matter. Late tax returns can still be penalized. Late payment can still be penalized. And after the first year, quarterly update penalties become more serious. So the smart move is simple. Treat 2026 as your practice year, not your excuse year. Thanks for watching. Subscribe to SelfTax for clear practical UK tax guidance. Stay informed, stay compliant, and stay one step ahead of HMRC.